Hi, I'm Ira Kalish, Chief Economist of Deloitte, and this is your weekly economic update. Lately, bond yields in many countries around the world have risen sharply. Well, let's consider specifically what's happened with U.S. government bonds. In recent weeks, inflation expectations have remained relatively tame, and expectations for a tightening of monetary policy have actually eased somewhat. And yet, despite that, we've seen bond yields increase even further, with the yield on the 30-year bond rising to the highest level in almost 20 years. So why did this happen? Well, in addition to concern about inflation and monetary policy, bond yields also reflect a risk premium, which has to do with supply and demand conditions in the bond market and the possibility of default as well. One reason is there's been a sharp increase in the supply in the bond market because of the huge issuance of debt by technology companies meant to fund the rollout of AI. And so when there's a big increase in the supply of debt, investors require a higher return in order to absorb that into their portfolios. The other reason, I think, which is probably more important, is that investors, both here in the US and in many other countries, are increasingly worried about the scale of government debt and the continuing structural budget deficits. Here in the US, the budget deficit is actually historically quite high, especially at a time when we're not in recession and we're not in a major war. And the volume of debt continues to increase. Moreover, there does not appear to be any movement in terms of policy to bring that debt level and those deficits down, which evidently has concerned investors. Now, the U.S. government has mostly run large budget deficits for the past half century. In fact, I can remember back in the 80s, many people saying this can't go on forever. And yet it did. And despite those concerns, bond yields actually came down over that period. But now they've gone way up. And investors evidently are starting to really be concerned about the future trajectory of U.S. fiscal policy. Not that they're concerned about default, but they are concerned about the ability of the financial markets to absorb so much debt. It's not clear how this is going to unfold over time, but in any event, that's the outlook for this week, and I hope you have a good week.